I have the pleasure of introducing Gatis Roze. He's one of our senior technical analysts here at StockCharts.com. I mean, he is a CMT. He's written books on tensile trading. So really excited to see what you have to say about the tensile trading philosophy and what you're going to be doing as far as relative strength today. So I'm going to just pass it right along to you.
Well, thank you very much, Erin. Well, good morning, everyone. I guess I have to be sensitive to the people in different time zones, but the title of the talk will become evident here as we go along, and most of the material here it's an embellished version of what was in the book, which came out in 2016, and plug the book here. This is the basis of the book, and relative strength actually has an impact on 7 of these 10 stages, even starting with money management, where you're looking at asset allocation and how important relative strength is in the asset allocation arena. But this may seem a little bizarre if you're talking about relative strength, but the first question you always have to ask before you address the relative strength question is, what's the trend of the market? And so that the market, as we know, can really only be in 3 phases, either uptrend, sideways, or downtrend. So that's a paramount question, and obviously here you can see there are other questions, but we're going to focus answering that first question: what is the trend of the market? We have in a chart pack, we have a chart list 10.1, which is called permission to buy, sort of self-evident. And what that is filled with is a number of charts that start with the telescope and go down to the microscope level, and they help you focus or answer the question, what is the trend? We all have different trading time frames. So I'm not going to make an assumption that your trading time frame is the same as mine, but the key question, as I say, before you get into the relative strength, is looking at these, and this is just an example of a chart list. This is an example, again, a chart from the chart pack, but Daryl Guppy, an Australian technician, has this approach of all these exponential moving averages, and it's pretty simple. You can see that as the trend changes and the present trend, it's a very simple, colorful, the way the trend lines interact and compress and expand. So that can answer that question. So this is the chart pack that I mentioned that Grayson and I put out every quarter, an update, and it just magically gets downloaded to your account, and you get 96 chart lists and well over 1,000 charts. So that's a plug for that. It was interesting when Tom mentioned value. This is the opposite of value. This is not looking for value, catching falling knives, all those. William O'Neill loves to say, don't be afraid of leadership, because and I remember that was the case that I was really reluctant years ago with looking at Amazon at 100 and 150, thinking, oh my gosh, it's extended. Well, not so much at 2000. So this is really the basis of the foundation of the tensile trading approach, is where you're looking at the market, and then you're moving from assuming an uptrending market, looking at the strongest sectors. We have 11 sectors, looking at which one's the strongest, and then moving, as most of you know, the 11 sectors, each sector is broken down into industry groups, and then we're going to look at strongest industry group and look at the strongest stock in that strong industry group. So we're really embracing this top-down analysis, if you will. I'm going to take you to actually to the website and show you how this can be done very, very easily. So if we go here, and I can't believe this is a free tool, but we're going to be looking at the 11 sectors, and we're going to look at, let's say, last 40 days or so. I like to see this kind of chart. So what I'm seeing is clearly technology is strong and interesting. So I'm going to focus on technology. So if I go back here, the beauty of this is here we have all the 11 sectors. We've just established that technology is the most interesting. If we click on the technology sector, we can see that which industry groups make up technology, and we see that semiconductors is at the top of the list. So let's take a look at the stocks that make up that industry group, and you can see here that they're sorted from strength to weakness. We're actually going to look at use the 1 month time frame. So you can see here it's a long list of really terrific stocks. We're going to pick a couple of these and show you how to build very slowly and piece by piece how to build these the Fab 4 approach, as I mentioned. So I've loaded a couple of these things into a chart. So this is, I like the name POW. This was one of the top performing stocks amongst its sisters in the semiconductor industry group, which we know is part of the strongest sector, technology. So this is how we build a relative strength chart, the Tensile Trading approach. We're looking at it, and you can see here that at one point it was underperforming the market, and I use VTI as the surrogate for the market as opposed to SPY or the S&P 500. The first step is to look at how is your equity performing relative to the market. And I'd sort of like to point out, I did these charts last Thursday. So it's actually continued to perform up, and you can see it's moved up very, very strongly. The second thing we would want to look at is how is the sector, technology, performing relative to the market. So here we can see that the sector, technology, is indeed outperforming the market. So we've got two wins at our back, probability wins, as I like to call it. Now we add the third chart and we ask the question, how is this particular industry, which makes up the technology sector, how is it doing relative to the other industry groups in the technology sector? And you can see this industry group. So the brothers and sisters are all, not all, but as a group, they're outperforming the technology sector. And then finally, we move down here and we see how is the stock of interest. So Power Integrations is indeed, look how it is outperforming its brothers and sisters in the semiconductor industry group. So there you have it very quickly, 1, 2, 3, 4. And then here's the chart that you pull up. If all you have to remember on the website is actually my name, and you can pull this chart up, and you can see here that at this point, it's outperforming the market. The sector is strong. The industry group is outperforming the sector, and the stock is outperforming its brothers and sisters. The other thing I like to look at is I'm a volume junkie, so I like to look at on-balance volume, and you can see that we have a very strong on-balance volume in this stock. Another stock that appeared in that list that I just previously showed you was IPHI. And you can see that the same thing applies here, that at this point there was clearly a change in relative strength where the stock is outperforming the market, the sector we know, the industry group, and the equity itself is outperforming its brothers and sisters. And you can see how that has done actually, as I say, over the last week. Here's another stock that was performing nicely in that group that I showed you of the equities in the semiconductor group. And you can see the same sort of thing happening And what you're doing here is you're aligning the probabilities, the winds of probability, you're putting them at your back. And it's a much higher probability trade. You can see here too that we're looking at on balance volume being of interest. Micron's the last one I'll look at here in this group. And you can see again the 4 winds of probability are blowing nicely. Here we've got a little overhead resistance, but look at that money flow. Very, very attractive. So the other thing that you can do on the flip side of relative strength is you can look at stocks that are, you can use it as a sell indicator, or you can look, if you're looking for something to short, if you will. This is an example of taking that previous chart I showed you of the stocks in the semiconductor group and looking from the bottom up. So look what happens when you're looking at something like BP, and you can see, yes, it's started to underperform. It's underperforming the market. The energy, actually, I'm using going back. Well, I can actually do that. I think if they don't kick me off the stage here quickly, I'll go back and show you why we picked that. So we're now looking for weakness. So there you see how the energy group is clearly the weakest. That's 200 days. But if we go down to be consistent down to the 40 days, it's still a pretty ugly. You can see energy still pretty ugly. So if we go backwards and click on energy, and now we're looking for the weakest group, and then you go into, try to catch up here on my notes, you go into the weakest stock, the weakest industry group, then you can find a bunch of really weak stocks, and then you're right back to either looking to short stocks or using the tool. That's really what I'm trying to show you here, that you can actually use the relative strength, the Fab4 approach, for a sell tool. So as it starts to deteriorate relative to the market, the sector's deteriorating. Here you can see the industry group, and then the stock itself, BP, relative to its brothers and sisters, it's pretty clear that this deterioration has been happening for a couple months now. And you can see here we've had a couple gaps down. So from the Fab4 approach, you can use it on the downside. So relative strength isn't necessarily something you have to think of just as a positive. Here's Murphy Oil, and you can see it's been underperforming the market sector, we know, and then the stock itself relative to its brothers and sisters. So in our book, we talk about something called the triple, when you get 3 lower peaks to sell. Well, here you can see you get 3 lower peaks. It's like sell, ask questions later. You'll notice also the on-balance volume is not very attractive. Next decade is another example. You can see how here at this line, if you start, it almost picks the very top. The deterioration is pretty obvious. The money flow is negative. It's a very powerful sell tool as well. In the first one, we were looking for the winds of probability on the upside. Here, what you have is the relative strength winds of negativism here coming in and saying, okay, let's get out of this. Repsol, the same thing. You can see all the deterioration in the Fab4 chart that's going on, and the negative money flow. So there are some very specific steps that you can take. If you go to any chart you want to put in, Misfit, that's a great stock, one of my favorites. Since I'm sitting here in Redmond, I thought I might as well use Microsoft. So if you get a Microsoft stock, and if you can remember my name, which I know is tough, just go to the bottom of the list, pull up my name, click on that, and then there you get the Fab4 chart. So it's all pre-formatted for you, makes it very easy. Hopefully anybody can follow along there. I'm going to go back to the keynote. This is just showing you where to find it under chart styles. You can also use it, and I use this, the relative strength approach, for ETFs and mutual funds. And I'll show you, I've written a lot about best of breed and how I use them. I've also written about the fact that I have 20 asset classes that I maintain. 19 of them are exclusively ETFs and mutual funds. One, which is large cap stocks, are my positions in Visa, Microsoft, Amazon, those are the individual stocks that I buy. But for the others, how do you decide which ETFs or mutual funds to buy? Well, I maintain charts. Here's an example of my mid-cap chart. The green line is always the market, VTI. The black line is always the symbol at the top, in this case, JKG, which is the Morningstar Midcap ETF. So the first question we're answering here is that there are some very nice midcap mutual funds that are outperforming the ETF. So we have those answered that question. And then I've owned a mutual fund for a long time, Prime Cap, aggressive growth. And you can see the orange line outperforms, the market outperforms the ETF. And it's on a relative strength basis. It's just where you want to be in the mid caps. Now, in this case, it's mutual funds. If we go to biotech, here we have XBI, which is an ETF, a basket of the best biotech companies. Once again, you can see what the green line is, the market. So how is biotech doing relative to the market? And then you can see the best mutual funds. How are they doing? Well, in this case, it's clear that the way to play this asset allocation category, in my case, this biotech, I play it using XBI because the relative strength of XBI is far superior to my other benchmarks. Another example would be healthcare. Here are, again, the black line is VHT, which is an ETF, Vanguard ETF. The green line you can see is pretty close, but the top mutual funds are actually underperforming the ETF. So in the healthcare sector, I will admit I use a mixture of ETFs and mutual funds to cover this because healthcare is obviously a huge area. In small caps, you can see, again, the same way. Where's the market? Well, the market's very similar to the black line, which is IJT, which is the iShares Small Cap Growth Index. But the thing that you're answering here is the Virtus Fund is absolutely, hands down, the best small cap fund out there. And so that's where I put my money. And the fact that it's outperforming both the market and its ETF bogey makes it very attractive. So this is just showing you how to use and maintain relative strength charts for your different asset classes. Because at this point in my life, I'm more of an asset allocator than a stock trader because I find that that's maybe the lifestyle that I prefer to lead. And also so much of your bang for your buck comes from making the right asset allocation decisions. Sometimes when you own things like Visa, MasterCard, and Amazon, those are sort of one decision stocks, so you don't need to think too much about that. But so back to the book, I suggest if you buy it through StockCharts, you get a signed copy. If you buy it through Amazon, it's not signed. So there's a shameless plug for the book. Most of you, I hope, know that Grayson and I write a journal since 2012. It's the Trader's Journal, a blog. So much of, if you just go in and under the search button there and say, well, let's find out some more on best of breed or relative strength, you're going to get a lot of different blogs about that. And then we have a website, stockmarketmastery.com, where we announce if we're doing boot camps, or I'm actually doing 2 classes for local people in at Bellevue College in September. Come visit us on Stock Market Mastery, and you can register. We'll keep you apprised of. I was on the Money Show, I guess, a few weeks ago, and just what's going on. And the blogs are connected there, and it's an educational website. So that is a quick summary. Hopefully, somebody has some good questions, and we'll take it away from there. So I'll turn it back to our illustrious moderators.
Yes. Well, first of all, great presentation. I completely agree with just about everything you went over in the presentation. I know my charts are
okay. What don't you agree with? Let's get a debate. No, I'm kidding.
Yeah, about the only thing different is I like to use, the S&P as my benchmark. You use the Vanguard, but I mean, still not really a big deal. But I think it's really helpful to see all of those different areas line up. I like the top-down approach. You get the market going up, best sector, best industry group, best stock within it. I think that will completely change people's their results if they're struggling with the market. I think that is a tremendous overall strategy.
I think, Tom, because you are at sort of the top end, the gold part of the market, that makes absolute sense. But the fact that I'm really covering all the way down to small caps, I don't buy them individually, but that is the reason I like using VTI as my surrogate as opposed to SPY. It's just, it sort of covers everything, and that appeals to me where I am today. Years ago, I was like you're a young guy, aggressive guy. SPY was my bogey, but I've changed over the years to VTI.
Well, I appreciate the whole young guy comment. I don't know about that, but appreciate it. All right. Well, I've got a question for you, and I'm going to bring this one up on a screen so everybody can look at this. I know when you talked about relative strength earlier, and you were just using an example, but you pulled up 40 days. And I was looking, this is the XLK versus the S&P 500. And you can see, like, back in April into the early part of June, we had this relative downtrend in technology. But of course, the market was coming down. And the same thing back in October through December, we had technology underperforming, but the market was coming down. How do you factor in, when you're looking at relative strength of a sector, let's say, how do you factor in, just a normal correction versus, say, the start of a bear market? When you start to see this, when does it get worrisome for you when technology is underperforming, let's say?
I would send viewers, listeners back to that first chart or chart list that I showed about, where I mentioned you start from a telescope and go down to the microscope level. It really depends on the trading time frame that you personally have. And one of the things I did years ago, I presented a chart, a particular chart to the class. We had, I think, about 115 students, and I said, okay, we're going to trade a long-term chart of, trying to remember, Apple, let's say. And what was interesting was that I had 8 charts of 8 different time frames, and said, okay, where would you buy this? Where would you sell it if you were a long-term investor? And then all the way down to short-term. And it was interesting that there were these crazy engineers from Boeing that loved to day trade. So their time frame was, they loved that 1-minute data, 20-day charts. But about an eighth of the class were really long-term traders. And some of these blips that you just asked me about, they would ride those through because they know that they're long-term traders. So really, if you go to a cocktail party and you're a long-term trader and you run into a day trader, you guys really need to identify what your trading time frame is before you start asking for advice or comparing notes. Because I have a good friend, and this actually happened at a cocktail party. My good friend Harvey Baraban is a day trader. So he was telling Brenda at the party that a core position for him was Square. And so she tells me in class next Wednesday that, oh, she bought some on Tuesday. She bought some Square because Harvey had said it was a core position. Well, you have to understand, Harvey's a day trader. For him, a core position is something that he held over the weekend. So he was selling his stock on Tuesday to her. So it's really critical that you understand yourself and what your trading time frame is, to really answer these kinds of questions that you asked. Boy,
Yeah.
I guess I threw it back in your court, didn't I?
Well, that's okay, because I got a response. So what I looked at and what I've been finding is, and I've used relative strength more in my trading and analysis. I mean, I've always used it, but I've been using it a lot more over the course of probably the last year. And one of the things, and that it's now my chart style on here that I use at StockCharts and all. But one of the things I've noticed is that when you're in some of the best stocks within the best industries, within the best sector, and the sector goes down, sometimes those great stocks within that sector still manage to hang in there because they are among the best.
They levitate. They levitate.
Yes.
And that doesn't mean that you need to liquidate your positions, but you have to understand that the stock market is a probability game. And so you have to understand that the probabilities now have diminished. So why not take some money off the table and look good?
Yep.
So it's all a matter of, as I say, I spend more of my time now as an asset allocator because I'm moving money from one big basket to another based on the kinds of things that you're talking about.
Right.
So know your time frame, use it to rejigger the size of your baskets, and understand that it's all a probability game. So when that thing starts to, I showed you four ideal semiconductor charts that the wind is at your back because all four of the relative strength charts are aligned. When they start to disintegrate or deteriorate a bit, take some money off the table. It's okay. It feels good. Buy a new car. That's what I seem to do.
You have larger positions than me, because for me, for me, if when I take something off the table, I just get like a Chipotle burrito or something.
You should live in Seattle. Oh gosh, honestly, Seattle is. I wrote a blog about this a while ago. That this. Unfortunately, he passed away with cancer, but his wife bought 4 positions. And in the last 5 years, the blog explains she got into 4 local stocks, Seattle stocks, that she can go and attend the annual meetings and read about. Amazon and Microsoft are always on the front page of the newspaper here. And her position he left her $900,000. And 5 years later, now she's over $5 million. And, she's a retired school teacher. I can't say she's an astute investor, but she's an astute investor, and she goes to all those meetings and raises her hand and asks questions. She's really enjoying it. It's great. So,
all right,
move to Seattle.
That's the answer. Well, it's been great having you on here, Gatis. Really appreciate you taking your time to join us this week. It's a big week, relative strength. I know you obviously use it quite a bit in everything you do, and
I'm a big cheerleader.
Yep, absolutely. So thanks again for joining us, and come back and see us again soon.
Will do. Thanks, Tom. Thank you, Aaron. Thank you, StockCharts.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.